Hey, what's going on, guys? Today I will break down for March 18th some of the trades that I took and some of the things that I'm looking at going forward. These videos are not going to be long, and probably for some selfish reasons, this is a way that I can journal my thought process, but more so for you newer traders, just getting insight into someone that trades every day, what we do and how we think about our decisions. And, if we're taking losses, which I did today, I was down $400 on my scalps. How we deal with it. And I want you guys to get insight into that. But with where we are with the market climate, we're getting pretty significant pullbacks. So I would like to discuss that with you today. Going forward, you'll be seeing me do a lot more of these breakdowns and just talking about my thought process. So you guys, again, for those of you that have not as much experience, understanding, how to basically self-coach yourself. So let's dive into that. First and foremost, I'm showing you the VIX. So the VIX is the CBOE Volatility Index. This is something that I monitor on a minute-by-minute basis. I want to know where we are. I want to know if option contracts are expensive relative to where the VIX is. And yeah, more or less they kind of are. If you've noticed, depending on if you are trading every single day, SPY and QQQ, IWM, and DIA, they're not really doing so hot. So let me go here to my positions watch list. These are not all my positions that are on. I'm not in very many positions at the moment, but let's look at SPY. So SPY had about a 1.2 to 1.4% drawdown at any given time. This morning when I got on YouTube, I spoke about not chasing the long. I said that we needed to trade back down into this area. That's just literally what I said this morning. The reason why is because I don't think, personally speaking, this is more subjective than it is objective, but I don't necessarily think that the institutions are ready to give up their positions. I don't think that we see a lot of volume overall. There was a little bit of volume here on the short side. I didn't see that this morning. I don't necessarily see the order flow. I don't see the level 2 data. And I really don't see the sentiment getting any better for the short term. So tomorrow, right, depending on when you watch this video, FOMC is already going to happen. The probability of an interest rate cut is relatively low. Okay, so what I'm thinking is if we do make another leg lower, since I don't have any substantial positions on, I'll disclose my positions. I won't tell you how many shares I have. I don't want you guys to get the wrong idea or to influence anything that maybe I'm doing. And just in case I'm wrong or my stop loss is hit, I want you guys just to be prepared, do your own due diligence on some of the things that I mentioned, and then make concise decisions. I do that with all my trades, and I encourage you to do the same. So on SPY, in my personal opinion, 555 is what I'm looking for. You'll see a more detailed chart here on ES. Actually, I'll do SPY on TradingView because I got it marked up, and I have something called the voodoo lines. The voodoo lines are just support and resistance. It's a fancy indicator that I paid a lot of money for. Do I like it? Yes, I do like it. It does a lot of the legwork for me. I'm sharing with you what the voodoo lines are, okay? So the fire line is going to denote it has a hierarchy structure. The fire line, the tree line, the snow line, and then you have something called the sky line. So the way that you should just alineate or just understand the differences of what the colors are saying. The red line is usually the strongest support and resistance levels. If you take notice, I have less red lines on the chart overall. The second most important on the hierarchy is going to be the tree line. And then after that, I have something called the snow line. So in between these areas, I'm generally looking to take positions. I want to take long or short or whatever. And I'm using whatever number of indicators for me to make that determination off of the shorter time frame. So what do I see back down at 560, 555? I see a snow line, and here I strategically put a support level or an alert level. So let's remove that just for a second, and then I'll put it back on. I'm looking for that level to hold and then possibly start buying some long positions on. Now, I will not be buying SPY. I'm not interested in SPY because the return is not that great. I'll talk about a couple of them here if you just permit me and follow along with me for maybe 10 minutes. So I'm looking at that. If we make another leg lower, if you just notice, I'm going to throw on the voodoo lines once again. If we make it another leg lower, I'm looking at 555. We were just there not that long ago. Check out the moving averages that are fanned to the downside. Most of you will make a note that my moving averages are a little bit different than yours. That's perfectly fine. You don't have to follow my technical analysis. I'm just sharing my opinion. Going a little bit lower, I have a support level at 545, and then below that, I have 542. and then I'm going to follow the voodoo line all the way back down to 537. So, about a month and a half ago, if you would have told me we're trading back down to 560 on SPY, I would have said, you are out your mind. I don't think that right now. I still think that we are in overall bear territory. And I think that the implications of you thinking just straight up long and gorilla into trades, I don't think it's going to be any different if fundamentals don't change. I don't think that if we start dissuading from talking about tariffs, I don't think that market or bear sentiment is really going to go away. I do like to look at certain barometers or indicators for market sentiment. There's a myriad of different ones. But all in all, what that translates to, because I want to distill this as best as I possibly can, I think that we have more downside. FOMC might be a determination. It will be a big surprise per the article that I was reading here on Forbes. There's a number of different articles. Be careful with your confirmation bias. I have to be careful with this as well. I don't know what's going to happen, but markets currently are giving a 3% chance of lower short-term interest on conclusions of the FOMC next meeting for March 19th, which will be tomorrow. So going back, I'm not really seeing a lot of potential upside if expectations are fairly low. So now let's go to Qs. I spent a lot of time talking about SPY. Let me give you some of those levels a little bit more streamlined. So levels for me right now is going to be $465. If we do go back to our QQQ chart and we do that on TradingView with these indicators specifically, we're right on the fire line. So these get updated every month, right? You do have to pay a monthly fee, but you guys are getting them right here, right? I'll share them with you. Research them a little bit, understand what the Elliott wave theory is, and then you guys will get a better sense of why I even use these pretty lines on my chart. We're right on the fire line. It's 472-ish, $473-ish dollars. Fine. A leg lower would put us in the 468 vicinity, and then lower than that, we're looking at 466. Cool? So all in all, if I remove the fancy voodoo lines, and then I'm just looking at what you learn for technical analysis when you first get started trading, just use your eye, right? Use common sense. Common sense will dictate that we have another leg lower. I don't know if we're going to make it. My responsibility and the way that I trade, I have no bias. I really don't. It's all about me determining what is the risk reward and what is the probability. You'll hear me talk a lot about risk reward throughout these videos. So what is the perceived downside that I can see from this level? I mean, the downside is almost 4%. So if we get to that 4% mark, I'm going to use my risk reward calculator, which all of you should be using, hopefully, right? If you learn anything from me, every determination, every decision that I make is all based on risk reward. If you trade differently, that's fine. That's totally fine. I'm probably not the trader for you, but I consider risk reward, it's the most important thing for me. So back down here, if I can get around those levels, right? Another, let's say, how much do we need to move lower? If we move another 3% lower on Qs, which is totally possible, we move 2% lower today, right? So don't think it's not possible. I think I want to buy into QQQ. Now, I'm going to mention a couple things that some of you have never heard of, right? So bear with me. And again, just because I'm mentioning them, do your own due diligence and make sure that you're very suspicious of everything that I say. You need to be like that. We're suspicious people as traders. So don't think just because I'm interested in something that you have to be interested in it as well. Our psychology is very different. Our risk appetite are very different, and our account sizes are going to be very different. But what I would like to take, I like to trade leveraged ETFs. This is a staple of my trading strategy. I've been doing it for more than a decade. So as you can see, I already have this outlined. I'm looking for roughly about $58. If we get that 4%, drawdown on Qs, we're going to be trading around this vicinity, around $53. You're only going to hear this from me, right? This is totally out of context, but back in the day, about 4 years ago, I shouted from the rooftops, literally to get into TECL at about $25. I didn't buy into this, and this was a huge mistake. But I think that we're getting the opportunity to do so, specifically at some of the levels that I already outlined. So if you're still with me, if you haven't clicked off the video, around here is what I'm liking, okay? I'm liking specifically between $52 to about $55. I think that there's just going to be a level where it's just undeniable. Now, obviously, there's a demand level back at $42. At $42, I'm going to be taking a substantial position, because the upside is just going to be so freaking good. Okay, more than likely, I'm going to be putting a large percentage of my portfolio in this, and I'm just going to sit tight and leave the day trading off to the side a little bit, and worried more about paying my capital gains tax. So cool. TECL, you guys already understand that I'm highly interested in this. I didn't go over YM and I didn't go over RTY. So those are basically the diamonds, the Dow Industrial Average. A lot of a lot of futures traders, they recognize it, but a lot of retail traders, not necessarily, because it's not the most interesting thing in the world. So let's check out DIA. As you can see, I already have this marked up. So I'm going to give you these levels a little bit quicker. I had 408 marked up, so this coincides quite nicely with my voodoo lines. But if we start ripping, well, ripping is not the right terminology. If we start selling off back down to the $400 level, this is going to be an undeniable risk reward. Maybe you're watching me for this first time, or maybe you've been following me for any number of years. I do well on DIA. I have a very good track record with DIA, just because its price action generally is just substantially well received in the market. It follows trends quite well, and it's pretty easy to do technical analysis on. So I foam at the mouth. I'm literally foaming at my mouth, wanting to get into a DIA trade, specifically if we trade into this pocket right here at $400. Some of you guys want to see what the voodoo lines are, so I will gladly share them with you. We are below the fire line level, which is $420. The fire line level is right there at 400, right? So I'm not just picking these levels out of a hat. There is some analysis that goes behind this. Okay, so you got DIA, and then the last thing that I will discuss here is going to be IWM. I'll talk about a couple of other trades as well, but I don't want to overwhelm you. Some of you are watching me for the first time, so we'll take it in strides. As we start to acclimate to one another, you guys will understand I do this, after the market closes. I do a lot of analysis, and I'm generally getting to work preparing for the following day. This is how I do it. On IWM, off of the daily time frame, we are in a very interesting demand level. That demand level is back at 198. I called out 197 in the Discord. I did not call out the bottom, nor did I take it. So that's not something that I did. I was just aware that I probably want to be watching the $197 level. So how is this going to translate into a potential trading opportunity? As we start to move away from the narrative of interest rates affecting the market, which they are, right? I know that you have your own opinions onto this. If you're, a little bit more of an experienced trader, or you've been trading for a long time, 20, 25 years, economics, right? I'm not an economics professor, nor do I pretend to be. I'm just specifically a trader, and I think in probabilities. But when we're talking about the economical climate, I think that one of the biggest beneficiaries is going to be TNA. TNA is going to be a leveraged ETF that mirrors the price action of IWM. I'll talk about that in just a second. I'm literally going to show you. I just don't have the voodoo lines on TNA, so I want to start off with the right launching pad. We're in a demand level on IWM, at least I think so. So there it is. That's the demand level, right? What would be a lower demand level? Well, a lower demand level puts us approximately in the vicinity of about 190. So right here, we're approximately between 197 to 202. We don't do static levels. It's always zones. There's no such thing as static level. There's no such thing as a concrete level in trading. It doesn't exist. Everything needs to be relative to a zone. So you have that. Perfect. What would be the demand level below this? If you start following me, and if you start following my thought process, it's never one level. It's usually 3 or 4. So what would be the next demand level here, right? Some of you are going to say, well, the demand level is at 164. That's a little bit of an egregious and very pessimistic price target, but I'm going to say around here where we have some accumulation, I think that this is a more reasonable price target. So what would that constitute? That's going to tell me that maybe we'll pull back anywhere between 2.5%, all the way back here would be another 5% pullback, and then down here, my goodness, this is very, very big correction territory. We're talking about a massive depreciation in value in the entire market, specifically with small caps, but obviously it's going to be broad-based. So what do we have? Let's retreat back here to the voodoo lines, and we're right on a fire line. Why do I keep on bringing up fire lines? Because they're important, because they can constitute a reversal. So what would be the fire line all the way back here? You know, the second level, or in this case, level below this one, it's going to be 184. Okay. So that is approximately what I pointed out here. So let's remove the voodoo line and let's see where I drew out my demand level. Well, I was a little bit off. I was off by 4 points. So we'll move that up just a tiny bit, and we'll get into the 184 region. So fine. These would be the areas that I would watch in order for me to buy TNA. Hopefully I'm doing a good job in explaining my thought process. I don't like explaining anything that I'm doing in trading if there's not something mathematical and something quantitative about why I'm taking the trade. So you guys will see that the more videos you watch, or maybe not. Maybe I will dissuade you from trading the way that I trade. Either or, of course, the decision is yours. So now coming back here to TNA, I have a level that I pointed out around $30.50. So what am I constituting as a support level? Well, if we go by some of the metrics that we just saw, if we do have approximately a 10% pullback on IWM, which is a long shot, but doesn't mean it can't happen, that's going to put me at roughly about a 20% pullback here. So my level would be exactly 25. I've outlined this level several times in our Discord. At $25, there's a bag to be made. Cool. So yeah, I'm going to be buying into TNA, and probably very aggressively. We start pulling back from interest rates, then this is where I think risk reward is really, really good. Okay, I think it's going to be appetizing. Some of you are following along here. Some of you newer traders, I might use some terminology that might spark some things in your head, right? You may pay specific attention to certain words, but be careful with that. Make sure that you understand the entire analysis. I don't want to just use trigger words, because this is real money. I'm talking about putting a lot of money in certain positions. So I just want to be careful there. So risk reward on this trade, I don't think that this is an aggressive, I don't think it's an aggressive target. I really don't. This is going to be roughly about a 6 to almost 7 to 1. Does that mean that I'm going to day trade this? No, I'm not going to be day trading this. I'm going to be buying into this and holding here for a little while. I'm definitely going to be doing that. I'm known for holding on to long-term trades. I'm actually known for holding on to trades for about a year, maybe a year and a half, and they have anywhere between 100 to almost 600% return. So that's what I like to do, and that's what I'm looking for on these further pullbacks, all right? So just a couple of other things that I would like to mention. I'm going to reveal to you the trades that I took today, and then I'll finish today's video with just 2 or 3 other stocks that I'm interested in getting into. So on NQ, let's go back to that. I took 4 losses today, right? So don't think that I'm winning every single day, or every trade that I take is an absolute banger. No, that's not how that works. I took 4 trades today, and I lost on every single one of them. I did have a very clear signal to short, but I didn't really like where we were on our squeezes. Obviously, if you're looking at your TTM or the RAF or any oscillator that you use, or if you don't use oscillators and you're just strictly using price action, that's okay as well. I thought that I got a pretty clear signal there on the moving average. So I missed and I fumbled. I literally fumbled this trade approximately there. Trading my system or my style, I would have taken that, and I would have been moving up my stop loss as this started moving in my favor. So I fumbled a big trade. What I did do is I ensued in taking the following trades. I took one here, so I was looking to take the breakout. That failed miserably. So this is trade number 1. And then I went for trade number 2 approximately here. I was stopped out on this trade, specifically on that candle. I did not take this trade because I was already holding on to 2 losers. And then the third trade that I took, I went for a long trade right here, right? Because my moving averages were on the 3-minute time frame. I thought that I saw something. I thought that I was going to be catching a breakout here. I saw what some traders would constitute as an inverse head and shoulders pattern. I like the fact that we broke above resistance here. I thought we were getting a retest and then finally breaking above this resistance area. That didn't happen. So I'm just explaining something that I thought, but it just didn't happen. And then for the 4th trade, I did try again, but I think it came to break even, or maybe about, I think it was like a $50 loss or something. It was somewhere in the vicinity. I have to check the timestamps, but I believe it was somewhere along there. I take 3 trades. If I lose 3 trades in a row, they're usually Very, very good risk reward trades. And I'm moving up the stop loss probably as soon as I get into the trade, which is exactly what I did here. Per my account size, I took a $400 loss. Was it a large loss? Maybe for some traders, $400 is a lot of money. There's no question that it is. But it is such an infinitesimally small amount of my portfolio that I'm not messing with it. I'm okay. I'm totally fine. I know that I'll make the $400 on next couple trades. The only thing that I want to point out is the management of the trade. So my triggers, right? This is me doing it, my own journaling. And of course, this is going to be self-serving, but hopefully it will serve you guys as well. I took the moving average cross, a little bit on the faster side of the moving averages. I know you guys are not using my stacks. Most of you are using 9, 13, and 21. Don't change that. Don't change that, because if it's working for you, that's fine. I'm just sharing with you what I'm using. So I took that. I thought that we were going to get a PT at about 790, right? That didn't happen. So I took a small loss here. I think it was like $50. And then I went for trade number 2, got stopped out on a wick. I specifically took that candle. I got stopped out here. I believe that this was maybe another $40 loss or something like that. Here, same thing. I moved up my stop loss. My stop loss was at the bottom of this candle. And then as soon as I got into the trade, right, that candle moved in my favor. And then boom, I'm right into break even. So that was my break even trade for today. And then finally I went here. So this was kind of quick. This is off the 3-minute time frame. And I think maybe I took about $50 loss per contract. So I take more than one contract. So all in all, that came out to a $400 loss. I'm not just taking one contract. I take several. So that's it. That's the breakdown of the trades. I know that for my system, when price action is pretty tight, the way it was, right? The range on the trades were very tight. I'm thinking about almost 80 to 90 point range. Yeah, that's about right. I know that my system is not going to work perfectly, but when I do get these trades and I get a nice little candle, I get a nice little burst off of my moving averages and off of my squeezes, which I thought that I was lining up for here, then I usually get a good trade. Not always, right? So my system and my trading strategy is not always going to work, specifically when price action is pretty choppy. Most trading mechanisms and most traders out there have the same problem. In choppy markets, it's very difficult to make money. So I did fumble the bag right here. That is a very clear signal. I just didn't get the squeeze the way that I thought that I would get it. Here, looking back, obviously it's a very clear signal. But, you know, I'm not gonna complain for a $400 loss. I've been winning a lot of futures trades recently. Okay, let's talk just a little bit about some of the trades that I want to get in going forward. We're already running up on 20 minutes. I don't want to go over 25, 27 minutes. So I'll bring up just a couple of other trades. One in particular is Tesla. I would love to get into Tesla. My target is back down at 190. I will disclose that I did take a Tesla position, and I'm looking to trade Tesla from here all the way up to 240 to approximately $245. If I can't get that, then my stop loss is very tight. It really is very tight. So my stop loss is somewhere around $220. I'm risking maybe 5% of the position. So don't think that I'm doing anything crazy, because I'm definitely not. I'm really, really not. I want to share with you and disclose that if we get back down to 190, I think that that's a fairly decent support level. I'm not going to consider that a support level 213. We do have voodoo lines on here, but let this rest a little bit. We're down 45 or 47% from its highs. We just recently rejected a double top on the shorter time frames. The double top is all the way up here. It's not all the way down here. But anyway, we have supported 215. If we break 220, I'm out of my trade, right? I took several thousand shares. If it doesn't work out, I'll take the 5% loss, and then I'll look to jump back in again. So that's Tesla. Next, I do want to talk about Amazon, if you guys will permit me for 2 or 3 minutes. Amazon has a demand level between 187 to approximately 190. I'm not thinking about this in the short term. I'm thinking about this long term. I do want to get into TCL. I do want to get into TNA, and I definitely want to get into Amazon. So Amazon has a demand there. It also has a demand on the shorter time frame. Well, this is not really shorter time frame, but all the way back down to 180. And then I absolutely love it at 170. I think 170, will be chef's kiss, in my opinion, to buy into shares. If you're not a shares person, hopefully I didn't waste your time. I just wanted to outline some levels. Am I trading off of the shorter time frames? Of course I am. I'm a day trader, so of course I'm trading off the shorter time frames. But Amazon, I think that it is just froth with opportunity. If we do get some of the levels that I've outlined here, more than likely I'm looking to buy into it. Now, am I going to buy into Amazon, the main ticker? No, I'm not going to buy into Amazon, the main ticker. I'm going to do the leverage shares option. So leverage shares for me is AMZU. Again, I understand the decaying factor on leverage shares. I know you guys are thinking that in the background. Of course, there's a decaying factor. There's no question that there is. I like to, when these are extremely depressed, that's when I like to buy into these leverage shares. So that's just a note that I wanted to make sure that you guys understand. For the long term, this does not have a 1 to 2 perfect relationship. For every dollar that Amazon makes, AMZU is going to make a perfect $2. Over a period of time, there's actually a decaying factor. I'm not looking to hold on to this for extreme long periods of time, but I do want to get into them when they are extremely depressed. For sure, I want to. I have a very good success record with this. So that's what I'm looking for right there, about $28. Anything lower than that, I'm looking at entry approximately at 25. Cool? That's my breakdown. This video was on the longer side, but I had a lot to share. It is the first video that I've made, and this is what I'm going to be doing going forward. I'm going to be breaking down the trading day, some of the things that I'm looking for the next day, or maybe after FOMC. I'll outline the trades that I took for the day, and then we'll talk about just certain trades that I'm looking for, maybe for the following day, or futures trades that I want to take, and we'll talk strategy as well. If you want to leave a comment below, just say, hey, Sage, you did a good job, or you did a crappy job, and I'm not really understanding what you're doing. Perfectly fine. Feedback is more than welcome. I like to take constructive criticism, which I 100% am always open to. And keep in mind that a lot of volatility in the market, so be careful with any of your trading or investment decisions going forward. So I'm out. Have a good night, guys.